It's still well above its 200-day moving average, up 4% year to date. The S&P holding up well above important technical levels after all the bad news that we've had. So to me, I think this is not as critical an issue as it's being made out to be.
Well, Alessio, your views have changed. The last time you and I spoke, you were pretty constructive on markets. From what I see in your notes so far, you're not anymore.
Correct. In early March, we moved from a growth and cyclical standpoint, unrelated to the events that we're talking about today. We have moved into a more defensive positioning. We assessed that the rally that we saw between December and February across all risk assets in relative and absolute terms was a little too fast and too far, reflecting the optimism on inflation, which then started walking back. So we moved to a defensive positioning for other reasons. The developments of the last 3-4 days have only been a fortuitous catalyst for that price action to play out more quickly. But we believe we are back into a mode of growth deceleration, of growth expectations decelerating, and more policy tighter policy for longer is probably the answer at this stage. We need to see what this repricing is doing. I think this repricing is bringing down business and consumer confidence and is tightening credit conditions. So we remain defensive for now, and that's why we think monetary policy should also take a pause and assess the transmission mechanism into the real economy that is coming from this financial shock.
We can't pause, that's for sure. We're 1 minute away from that ECB decision. Alessio, Ella, Jay, they're going to stick with us as we work through it. Going into that decision, this is what we're looking for, a 50 basis point move. It feels like the world has changed in the last week. Let's see if that call changes in about 30 seconds. Equity futures going into the opening bell, negative, not by much, by a third of 1% on the S&P. In the Treasury market, the stage set as follows: 2s, 10s, 30s, 2-year unchanged, 3.88, anything but unchanged in the last week, from north of 5 to south of 4. Looking at the European bond market, let's take a flavour of things for you. Italy, Germany, yields pretty well behaved going into this one, at least this morning. And finally, euro dollar. This is how we're set up going into this ECB call. Euro dollar just south of 106, 105.96, positive 0.2%. That ECB decision, Mike McKee, is out.
50 basis points it is. The ECB still focused on inflation. The deposit rate goes up to 3% from 2.5%. The main refinancing rate is also raised by 50 basis points. They see inflation at 5.3% for 2023. That's a dramatic drop from 6.8, which was what their forecast was the last time they made it. They are going to, they say, continue to apply flexibility in the PEP purchases, which is no surprise. Here's a number on inflation in 2024, falling all the way to 2.9%. They are projecting that it will remain too high for too long, which brings you to that 50 basis point move. Now the question is, what do they say about the future? Because at this point, they had come out last time in February and